Hello everyone, I'm Wenjing.
I'm Tim.
Our project is HiveMindInvestor. The trend of the stock market has a strong correlation with the public sentiment. This is especially true for highly volatile stocks. The idea is to use the sentiment from the Reddit post to predict if stock will rise or fall, so we can make profit. The goal is to predict if the closing price will rise or not, or will rise or fall at the end of the week. So we make the prediction with the sentiment data from a week before the starting day of the target period, as well as the historical stock price data from January 2021 up to the starting day of the target period. We test our solution across 11 weeks between September 8th and November 21st on 6 stocks. They are Tesla, Amazon, Apple, Meta, Netflix, and Google. We use 3 datasets: Reddit, tweet, and stock price data for training and testing our model. We manually crawled Reddit posts and sentiments between September and November, and hand-labeled 1,200 of them for fine-tuning our model. For more data, we use a labeled tweet stock sentiment dataset download from GitHub. So we use the rest of the Reddit data and the historical stock price data kept from the Yahoo Finance to test our solution. This is the architecture of our solution. We have two models work parallelly. The static sentiment data and the historical stock price data are fed separately into the fine-tuned sentiment model and the trained time series model. Their output are combined with the combinational logic. The combined result is our final output. The sentiment model is a pre-trained binary sentiment classification model based on disturbed. It has around 40 million parameters. The input is the tokenized text data, and the output is binary logic.
And we also do time series model. It's a meta profit model. Basically, we just set parameters as daily seasonality as one of the settings, so it doesn't account for, it does take into account of the daily seasonality of the stock prices. And the post-processing, we basically essentially extrapolate the data for a week, and we just take the closing price of the beginning of the week and end of the week, and we take the difference between them, and to get whether it's going to rise or fall. And so basically what we did, we have 2 scores produced by our sentiment model and time series model, and we combine them with this combination logic shown here. The idea here is that the 2 scores, right, they are all between 0 and 1 because we pass them through sigmoid, but then they mean different things. So we use this sort of like signal amplifier in the form of the CIS, cubic inverse sigmoid function. So it's basically when they are close to 0.5, that means we are not as certain, then it doesn't really, has much like numerical value. But if you are more certain, it's larger than that, then they will have like a higher value. So when we are combining them, we can use alpha and beta to determine the portion of these 2 effects of these 2 scores, and we combine them to get a final prediction. And as we can see the results, we test our results over 5 methods, so time series only, sentiment only, that combine, and as well as against 2 baselines. So we use simple baseline. One is Monte Carlo trials, so basically we test over 100 runs, just flipping a coin, randomly deciding if we're going to invest or not. Or we use momentum method, which is basically assuming that the prior week's trend going to reflect what's going to be the next week. So if the prior week is going to rise, the next week it's also going to rise. If it's going to fall, it's also going to fall. As you can see, the combined model has a high performance across all except for Tesla, where it lost to the sentiment only. And it's always higher, like combined model is always higher than the time series only, although they are all very high. And if he actually takes it out and actually try to invest it, so we did this trial with $5,000. So simple rule. First, if the stock is predicted to rise, we will buy. If it does not rise, then we don't buy. And if you're buying, we always buy $5,000 worth of stocks at the beginning of the week and sell them at the end. As we can see, with Monte Carlo method, we are losing across the board bad economy, except for earning Netflix. For momentum, it's similar thing, except for earning Netflix. And at the end, with our HiveMindInvestor, we did not lose in any of the stocks, and we actually consistently earn in Amazon, Apple, Netflix, and Tesla. Moral story by Netflix. The discussion part here is like we basically observe this kind of like high correlation between sentiment and time series prediction, actually. So this plot is a little bit difficult to read. Basically, if the value is larger than this 0 line, it's higher than 0 line means we predicted correctly that week. If it's lower, that means we did not predict correctly. As you can see, almost all the time, if the sentiment predicted correctly, then the time series also predicted correctly. And there's very rare cases where the two didn't agree. Maybe for between November 3rd and November 10th, that's the only week where it didn't really agree. And so there's 3 reasons. So first is like, maybe because the people who are making those posts are actually, they also use similar method with forecasting, and then their posts are basically influenced by those. Or, maybe because the stock price actually reflects the sentiments, and that's also why it's basically the predictions sort of like we'll try to predict the stock price, which also predict the sentiment indirectly, or just a coincidence. But from the thing, I think it's not. And yeah, so basically reflection, we might want to use like a weighted sentiment next time, or use the base S&P 500 as reference. Yeah, thank you.